Hello and welcome to the NASDAQ MarketSite in Times Square. And with me today, Bill Carpou, the CEO of OCTANE, all the way from Southern California to snowy New York.
In a snowstorm, Jane. Yeah.
Snowstorm, a heck of a snowstorm too, so welcome.
Thank you.
And great to have you here. So I know you've launched a new component of OCTANE, so the Growth Services Program.
Correct.
Can you tell me a little bit about that and what kind of value that adds to OCTANE?
Yeah, you know, there's three components to it. One's in access to capital, the other is operational, and the third is a shared service component. So capital would be really seed and continued growth capital. The operational piece really is intended to prove very much like an operational group inside of private equity and help a company grow. And shared service is more or less back office. So financial closing, accounts payable, receivable, IT infrastructure, all intended to really help the CEO focus on growing the company and not managing the back office infrastructure.
I see. And we all know that entrepreneurs need access to capital to grow. It's like lifeblood of a young company. So what are you doing in that area to help?
So, you know, you're exactly right, and I mean that's the most critical component. Without it, nothing else matters. So we've really aligned four separate areas. One is institutional venture, and we've got great relationships with organizations such as Kleiner Perkins, Sequoia, NEA. The other is corporate venture, which is becoming very, very active right now. So again, some of the bigger companies that are all part of the ecosystem, we're working with their venture groups. The third area would really be a private investor network, specific more or less to Southern California, but investors that are really interested in high quality technology as well as family offices. And we tie it all together with a relatively new relationship we have with an investment bank.
Okay. And then earlier this year, OCTANE was a founding member of the Innovation Network of Southern California. What is that and how is that impacting the region?
Yeah, this is really exciting, Jane. So we were a founding member along with the Los Angeles Venture Association, LAVA, and the San Diego Venture Group, SDVG. And really what we've done together is take the existing ecosystems that we've had, pull them together, and I think for the first time integrated a Southern California ecosystem as opposed to an LA, an Orange County, a San Diego, and it's really pulled the universities, investors, incubators, and entrepreneurs, and the intent is really to elevate all of Southern California on both a national and a global stage beyond where it's been in the past.
And then looking ahead to 2019, what are your goals for OCTANE?
You know, the two things that are really most prevalent right now are continued job growth. So really the creation of high-paying jobs would be number one. Secondly is to build a sustainable organization. So we're looking at different areas that we could service entrepreneurs, service larger companies, and provide those for a fee basis and build a different revenue stream that will create long-term sustainability for OCTANE.
And you've recently established an investment banking partnership. So tell me about that.
So that's with Telson Securities. And we chose very carefully on this, and Telson has an office in Newport Beach, New York City, and Washington, D.C. They've done over 3,000 transactions since their inception. They're very interested in the tech space. They do a lot in cybersecurity, and that particular relationship with us now shortens the time period that an entrepreneur will take to raise capital. So, for instance, on their own, an entrepreneur, even utilizing the processes inside of OCTANE, will take somewhere between 16 and 18 months to raise capital. Under the Telson model, it's between 5.5 and 6 months.
Wow.
So it enables that entrepreneur an additional 12 months to grow their company, and the valuation difference at an 18-month period is substantially different.
Well, and that's really interesting too, because tech companies, things are moving so quickly that 18 months, your business model could change somewhat. So
that's exactly right. So you've got to be in a position to change and pivot your business model versus you're spending 90% of your time raising capital.
Okay. So what kind of impact are the Launchpad companies making? And what is Launchpad? So
Launchpad's our accelerator, and we expect to announce later this year, for 2018, record results for Launchpad for the year 2018. But cumulatively, we expect to cross the $2 billion mark of helping companies raise capital since 2010. We've had a couple of liquidity events this year, so we should surpass and be right at $1 billion in liquidity value. And we again expect and forecast the creation of over 10,000 jobs cumulatively since 2010, which basically puts us on course for our goal of creating 22,000 jobs by the year 2025.
Just with the launchpad companies?
Just with the launchpad companies. The other thing we're really interested in is retaining launchpad companies. So some of the work that we've done recently indicates and provides evidence that the launchpad companies, the upper tier launchpad companies that have presented at our conferences the past 2 years have all stayed in Southern California. None of them have been required by venture firms or for any other reasons to move. So they're, you know, we're finding the area now enables companies to really grow and expand their business.
So what is the profile of a typical entrepreneur in a launchpad company?
So what we're looking for from the entrepreneur is specifically a strong business acumen and a track record of success. But the 4 components we're looking at inside of the company is a proven business model, so a proof of concept, the ability of the entrepreneur to have raised capital before, generally in the angel round, a sound business plan, and a management team either in place or identified. Those are the critical aspects which will admit somebody into Launchpad.
Okay. And then 2 years ago, OCTANe was instrumental in launching a new fund called Visionary Ventures. So talk about that. Its performance, how has that gone? Is there any kind of future for that as well?
Yeah, you know, Visionary's been really successful, and you know, as you said, OCTANe was instrumental in launching Visionary, and it's performing right now as a top decile fund, and it uses knowledge as an advantage. So what we're blessed with is the ability that we've got a lot of expertise from the physicians, expertise from industry, and Visionary is an ophthalmic-only fund, investing in ophthalmology companies. So our intention as we roll forward is to take that model, and we will be announcing the launch of Visionary 2. So we've had successful exits already out of Visionary 1, and so we'll be raising capital for Visionary 2. And then we're looking at models that would be similar in the aesthetic space, in big data analytics, in cyber, and in fintech. Okay. So all of those are areas that are concentrated in Southern California.
So you've had some big events in 2018. I was fortunate enough to be a part of that, which was wonderful. Kind of wrap those up for me, and what are you looking forward to in 2019?
Yeah, you were. So first of all, thank you very much
awesome.
for your emceeing of our high-tech innovation awards. Beyond that, we had record attendance at our Technology Innovation Conference, our Medical Technology Innovation Conference, and our Ophthalmology Conference. But I think we look at something way beyond just attendance. We look at content and the buzz that's created. And in all of the events, including the one that you emceed, just there was an excitement, there was a buzz, there was people saying, hey, this is better than before. So, you know, when you look at quantitative metrics and you say, hey, we had more attendance and you know, financially we did better, those are great, but I really look for what people are saying about it, because that's going to draw them to come back in 2019.
Okay, so just a couple more questions. So in terms of what you've seen through your years kind of helping young companies grow, I mean, what would you say makes good entrepreneurs? I mean, we've talked a little bit about management team and proof of concept, but is there more on a personal characteristics that you find will lead to success?
I think it's somebody that's hard driving. There's an aspect of humility that the entrepreneur has to check their ego out the door.
Okay, so they kind of get how difficult it can be.
Yeah, and you know, I think a lot of them underestimate how difficult raising capital is going to be. So they're focused on the idea and not the business component. So what we really look for is coachability. And that's actually, we've had actually very good companies that come through Launchpad, and we will not select them if we think the entrepreneur is not coachable and is just going to continue to do things in their manner. So that really makes for a successful entrepreneur.
And it seems like persistence too is so key. Like you have to, I remember reading a story about Howard Schultz of Starbucks. Like, he talked to like 200 investors before he got his first money to grow.
It's amazing. I mean, it's sales. Yeah. It's building your pipeline and building your funnel. You can't get discouraged from it, but you hear stories all the time of people going out and meeting with 50, 100, 150 different investors. And so that's really what we try and prepare through Launchpad companies to be able to do. And what's amazing is the seasoned entrepreneur still basically practices on that. So even the individual that's raised capital before spends time and understands how important those first 3 minutes are with an investor.
Yeah, very interesting. Okay, and then finally, what kind of trends are you seeing in the venture capital angel investor world? I know tech is big. What are some other kind of trends?
Well, you know, so some of the trends that we're seeing is venture. Institutional venture has really moved up market. and your angels are kind of below $1 million. So we see a real gap in a $1 to $3 million raise. Okay. Venture generally doesn't want to come in anywhere below that, and even 5 million has become a threshold now. So we're seeing a trend that there's a real requirement, and now you're seeing micro VCs. So a smaller VC come down and be able to fill $2 or $3 million rounds, or private investor networks. And I don't mean angel groups, I mean individuals that are really ultra high net worth, that between 2 or 3 people could fill a $2, $3 million round, and family offices. So we're seeing greater participation in that 1 to 3 million, and more active engagement from an operational perspective on some of the bigger venture firms in the performance of the company.
Okay, very interesting. Thank you so much, Bill, for coming.
Thank you very much, Jane, for having me again. I appreciate it.
Great. And thank you as well for joining us. I'm Jane King at the NASDAQ MarketSite. Have a great day.